And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. Let's take a look at what we are going to be covering today. As usual, we are going to take a look at the broader markets. We want to see where we closed the week. And lots going on beneath the markets this week. As usual, though, we've had a pretty bumpy ride here this year. Also, we're going to take a look at some of the top headline news that drove price action. Also, take a look at some of the upcoming data economic-wise for next week. And recession fears still linger. And I'm mentioning this because we are seeing a nice broadening out in the markets where recession fear related stocks are on the move, but also high growth. So we're going to get into that. Also, building your watch list. And I've said this in the past, but it is really a wonderful time to begin getting those stocks on a short list so that in the event when the markets do turn, you are fully prepared. I'll share some hints as it relates to that. So let's take a look at some of these news for the week. Federal Reserve on Wednesday did come out with their meeting notes from their most recent FOMC meeting. And in essence, it was shown that the reason the last meeting had a 0.75, 0.75% rate increase was all about high inflation. So no big surprises there. The markets took that in stride. It was a generally constructive period for the markets this week. We did see oil prices at one point, they fell below $100 per barrel. That's a real benchmark number for investors. And however, with that, we did close above that level. We're going to take a look at that. And then overall, as it relates to the broader markets, mega cap FANG stocks, and each and every one of those stocks did outperform the broader markets this week. And that's all about that growth broadening out that I mentioned. Other areas also in growth are seeing some buying. We also saw employment numbers later this week, Thursday and Friday. We did see unemployment hit a 6-month high, and that was really unexpected. And then again, as it relates to employment, today we did see June employment numbers show strong job growth. So quite confusing as it relates to the employment situation relative to those numbers, a little bit of causing uncertainty in the markets, of course. Next week, we are going to get some really critical employment inflation data. Core CPI, that's that consumer price index that the Fed likes to look at, that will be released. We're also going to get producer price PPI report for June coming up next week, and then retail sales. So all highly relevant as it relates to investors really trying to unravel and get a clear sense of where the Fed may be heading, and then hence the broader markets. So from here, let's go ahead, take a look. Where did we close the week? And here we are with a daily price chart of the S&P 500. And we can see that the broader markets did rally for the week, up almost 2%. And of note here is the fact that we closed above this purple 21-day simple moving average. And the relevance here is we are on the lookout for what are called higher lows in the market. Eventually, a break back above this red 50-day simple moving average would be truly constructive. Your outside momentum indicators, that would be your RSI, relative strength indicator, and stochastics are both positive. And this is different, certainly from last week. Both of those indicators were negative. So from here, what we are on the lookout for is a continuation rally, because if we go back to this peak here in April, we've had these downtrend reversal attempts. They've been met with resistance either at this purple 21-day, or we've seen a slight rally above it before faltering. So at this point in time, again, we do want to see this nice uptrend continue further so that we can bring these moving averages into an uptrend so that they can act as support. The NASDAQ fared quite a bit better, up 4.2% for the week. So let's just move forward and take a look at that, as well as the underlying ETFs in the S&P 500. So what I'm listing here are those 11 sectors. I've gone ahead and added an RSI, that's that relative strength indicator, sorted these sectors in descending order. It's all about staying on top of and uncovering potential rotation, and then staying on top of where the strength is, where that relative outperformance is taking place. So here we are up at the forefront. As you may, if you've watched my show each week, you will know that healthcare, staples, and utilities were up here at the forefront for several weeks. We are beginning to see a bit of a rotation. Take a look. Technology up here in the forefront. That has not been the case for some time. We can take a quick look. This is XLK, the ETF for technology. Nice rally attempt. It was up 4% this week. Again, very similar to the broader markets. We've had these downtrend reversal attempts. We want to see a break above this 50 to give us a nice continuation sense as it relates to that uptrend. And then taking a look at these sectors a little bit closer, you do, of course, also want to be aware of those weaker areas. And we can see energy. It has been down here in the weaker area for some time since peaking back here mid-June. So taking a look at the overall group, XLE, we can see energy pulled back quite nicely to this 200-day simple moving average in the throes of attempting to reverse this downtrend. We are going to need to see more dynamics taking place. We want these outside momentum indicators to be constructive, and we also want to see more volume on the up days. At this point in time, distribution still rules. These higher bars are on your down days. From here, let's go ahead and drill down a bit further. I'm going to take us to a view of various sub-industry groupings in the broader market. We do have each of the broader market indexes listed, as well as the price of oil, the US dollar, those areas, and certainly ETFs that are very impactful as it relates to really giving you a sense of what is working or not. I'm going to go ahead and update this. We do have that RSI indicator here, and take a look. The US dollar trending higher. We can see a gap up on Tuesday that remained elevated, and that's impacting certain areas of the market that we'll get to. Also, biotechs remain up here. And those of you, again, that watch this show regularly, and if you don't, I advise you to do so, because we did identify biotechs moving into the forefront in June. Nice double bottom formation, nice continuation rally. The group was up about 5% this week. So we are seeing a lot in the way of vibrancy within that biotech space. I'm going to share with you some stocks as we move through here. Also, software, we talked about technology up 4% plus this week. Likewise with software, this is IGV, a highly watched software ETF. And we can see that it has now broken above that 50-day. That's what we want to see, a nice continuation rally, eventually pulling up these other shorter term moving averages. Your RSI now up in positive territory. MACD, not quite, but almost there. So we're seeing nice price action in software. Let's take a look at some of these other sub-industry groups that are really going to be quite impactful. And that here is going to be the yield on that 10-year treasury. So we did have a significant pullback in yields, but this week they are climbing. The 10-year, the yield is at 3.1, and that 3% level, similar to the price of oil at 100, that 3% level is a metric that's widely watched. A move up above that 3% is viewed as impactful. So we're going to share with you areas as it relates to that higher interest rate, because we did already review the fact that growth stocks were up, and that's not normal in a rising interest rate environment. So that is very interesting. We're looking here at semiconductor SOXX, and we can see this bounce that took place. The group was up about 6% for the week. Still has quite a bit of work to do as it relates to turning positive, but certainly constructive and counterintuitive, where we are seeing growth coming into play, again, in a rising interest rate period, and then also in a very contradictory or uncertain period as it relates to the economy. So let's go ahead and take a look at that oil price here. We can see that this is that dip that I talked about below that $100 price mark. We did close at about 103, but it is still quite a bit lower than we were up here in that mid-June when we had that peak. So of note is the fact that that energy sector is highly responsive to the price of oil. So if you are thinking of entering into that group, you not only will want to pay attention to that XLE sector, but also to the price of oil. So let's take a look at some of these other sub-industry groups that are of interest. I'm going to share with you the volatility VIX, and the volatility index had been elevated for quite some time, but we are seeing it decline. It is still elevated relative to historical metrics. We are at 24. Normally, if we're down around that 18, 16 level, that's a period where the markets are on steadier footing. So good news, volatility is declining, but we're not quite down to a level where we can really have confidence in these broader markets. From here, let's go ahead. I'm going to be sharing with you after screening, something that I do regularly every single day. For those of you that are not members, I urge you to subscribe to my bi-weekly MEM Edge report. I am very, very on top of these markets and share those insights with you in that twice weekly newsletter, but also share with you stocks poised to outperform the markets. And these are pockets of strength that even though the markets have not bottomed, there are pockets of strength that can be played if you are nimble. So I urge you again, use that link below to trial my MEM Edge report. So from here, let's take a look. I'm going to share with you some of the insights as it relates to more impactful moves last week. This is a view of the ARK Invest funds. I'm sure many of you are quite familiar with them, but what I did want to share with you is that last week they were on the move. This to me is another signal of a potential risk on market environment. We can see this is the ARKG Genomic revolution. This is in line with that move in biotech names. A lot of biotech names, of course, in this ETF. We can see the nice move, but let's take a look at another ARK, very high risk type of investment that is on the move this week. This is ARKK, ARK Innovation Fund. We can see it's broken back above that 50-day simple moving average. RSI, MACD are both in positive territory. So it's more of a proxy as it relates to getting your arms around what did take place last week. I'm going to share with you another view here, candle glance 2-month daily price chart view of those mega cap FANG stocks. We have to figure out how to put Tesla in there, but also Facebook changed their name to Meta. But at the end of the day, I have added that RSI indicator in descending order. Take a look. Google was up almost 10% this week. We can see nice volume characteristics on this rally, and the stock is definitely on the move. I will be talking more about this in my report this week, what to be on the lookout for with this stock, as well as some of these other FANG stocks that are now potentially in the throes of reversing their downtrends. This is Apple, nice break back above that 50-day moving average. MACD not quite positive, but certainly constructive as it relates to these high growth names. Tesla, another name up above that 50-day. Nice volume today. We can see these bottoms that are being created at higher levels. That is bullish price action, and now above that 50-day with a positive RSI. So lots of vibrancy taking place beneath the broader markets. So from here, I'm going to share with you some other dynamics that evolved last week. This is an ETF tracker that I use where I am looking at ETFs that are very indicative of the broader markets. So I'm going to go ahead and update this because, again, I have that RSI. I want to see where that relative strength is. And here we can see IBB. This is that biotech area that I mentioned to you earlier. But let's go ahead and share, I will, with you some of these other areas that are on the move. Now, this is today. We did see Palladium in particular potentially in the beginning of reversing this downtrend. Lots of unique dynamics taking place there. But let's go ahead and drill down because there are other areas I want to share with you. This is TAN. It's the Invesco Solar ETF, and it did have a nice week back up above this 200-day simple moving average. A number of solar stocks are on the move. I will share a couple of names there. And as we move down, you can, if you are inclined, take a look. This is IPO at what the underlying top 10 holdings are within these ETFs that are on the move. So I will tell you, with this Renaissance IPO ETF, it is primarily faster moving high-tech names. We can take a look at, for instance, RBLX. A lot of them do not have earnings, but they are beginning to see this nice uptrending price action. Again, higher lows, breaks above these heavy moving averages, in this case, that 50-day. And take a look. In turn, that moves the 10 and the 21. Your shorter term moving averages begin trending higher. This particular stock is finding support at that nice upward trending moving average. Outside momentum indicators are positive. So this is what we want to see, certainly as it relates to other growth stocks and technology names. So from here, I do want to share with you a couple of other stocks as it relates to that move into some of these biotech names. So just as it relates to what you want to be on the lookout for if you are interested in participating. This is a bit volatile, IRTC, but it did have that nice gap up today, super big volume. Let me share with you a couple of these other names. The biggest movers in biotech at this point in time are a lot of these smaller cap names. This is XOMA. What you can do with StockCharts.com is ask for that full quote. In turn, it will provide you quite a bit in the way of insight. We can see with this particular name that the market cap size is rather small. You can also see it's at 300 million. If there is a yield, it will share that with you as well. But take a look on the move, forming the right side of this base. One last name that we can take a look at as it relates to certainly constructive names in the biotech that are smaller. This is only 100 million, so tread lightly. It is trading now at about $9, but potentially reversing that downtrend. Nice volume, and we can see your outside momentum indicators are positive as well. From here, one other dynamic I did want to share with you as it relates to the broader markets. We're going to take a look at FinViz, and I'm going to share with you what is taking place in some of these commodity-related stocks as the week has advanced. These stocks fare well during periods of high inflation. Commodity will, of course, be the price of oil as well as some of these grains. So I did want to share with you, as the week evolved, we did see a move back into corn, wheat, and so forth, the kind of thing that you want to pay attention to as it relates to potential rotation in the markets. I talked about those high inflation stocks that are still on the move, as well as areas of growth. From here, I'm going to share with you a couple of the solar stocks that have picked up as it relates to their upside price movement. This is Enphase, ENPH. And again, with this view, you will get their sector technology, but it's in renewable energy. And a nice rally here this week where it pushed the stock out of a 1-month base into a breakout. Nice constructive momentum indicators. And then one other name that we can take a look at. There were several that were on the move this week. This is SEDG, Solaredge technology. Not quite out of the woods yet. I would like to see a base breakout above that 310 level, but here we are with that higher low double bottom formation. So we could see continued nice movement here. Last up, I'm going to share with you XLY. That was an area that was the top performing this week, up almost 5%. A lot of that has to do, of course, with Tesla and Amazon, two heavyweights in that group. Both stocks were up quite a bit this week, but on the lookout for a potential move up above this red 50-day simple moving average. And we are starting to see a little bit of movement as it relates to some of these former big winners in the consumer discretionary area. This is CROX breaking up above that 50, but this is all about getting that watch list together. You want to have those former big winners that are potentially beginning to reverse their downtrends with an eye toward a continuation rally once the markets turn bullish. We can see Etsy ETSY, another consumer discretionary retail name, breaking back above this 50-day simple moving average, nice volume characteristics. Again, a nice candidate, certainly for me with my watch list, because when we look at Etsy, we can see it's had periods of great outperformance. The growth prospects are there. Estimates are being revised higher for the company. So that is certainly one that I will keep on my watch list. I'm going to leave it at that. Everyone have a great weekend. I look forward to seeing you here again next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.